Alright people, we are in the trade right now. So it looks like price is flirting with my stop loss right now. Whatever. Detached as hell. I'm calm, I'm collected, I'm zen AF, as usual. At least that's what I think. Anyways, what we have right here was that price pulling back to this good old demand zone that we have right here. Right, and then it swept some liquidity, right? So swept some liquidity, and then it led to a fractal market shift that we have right here, which signaled to us that this pullback is over. So all I did is to mark two boxes. I marked up my supply right there, marked up my flip zone, right? You can see it right here at this fractal pullback that we have right here. This failed reaction was formed, and then I just waited for price to pull back to this flip zone. And I entered after it swept the available liquidity below this low that we have down here, right? So this was the liquidation candle. Just placed my buy stop order right above it. Just recently got tapped into the trade. So now let's see how it goes, baby. I'm back, baby. Feels good to be back. Anyway, guys, I'm just gonna be targeting. Let's not get greedy, yeah, because we know how that turned out, right? I'm potentially just gonna be targeting like this. Next 5 minute supply up here, right? So this would be a 1:4.85. If I want, right, I could literally shoot for the moon right now. I do think price is gonna go up even higher into this higher time frame supply zone before price will continue lower. So if I want, I can go for like fucking 1:10. Should I go for 1:10, right? Just get a home run, and then I will just stop trading for the rest of the year. Bro, just think about it. If I win a 1:10 R trade, I make 100k on that trade. Is it 100k? Yep, that's 100k. It's been so long since I make 100k on one trade. Yeah, so if I do make 100k on one trade, I think I'm good for the year, bro. Alright, you know what? Let's just be conservative when it comes to TP, and I just set it at like right here, 1:3.5 R. 1:3.4 R, that's good for me. Let me just set the TP at 1.1222222. Yeah, right now, judging by the current price section, we're gonna hit TP, baby. I'm so goddamn confident. But with that said, there's a difference between being confident and being certain. Right now, I'm confident the trade will play out, and I'm gonna trust my edge. But at the same time, you must understand that, like I always say, it's a game of probabilities. And I don't know who needs to hear this, but stop looking for certainty in trading. The truth is, there's no such thing in the markets. You're never ever gonna have 100% confirmation. All the stars in the universe is never gonna align for you to actually execute that trade. You're never gonna have a setup that guarantees that it's gonna hit take profit. And the second you try to force that level of control, just understand that you will start hesitating, you will start second guessing, and you will start sabotaging your own trading system. And what separates professional traders who are consistently profitable from everyone else is that they have made peace with uncertainty. They know that they can lose this trade and it won't shake them whatsoever. It's not going to affect their confidence, it's not going to affect their edge. The reason is because they have data that actually prove their trading strategy works. As a result, they trust their edge, not the outcome. You will not grow if you win every single trade. You will only grow when you execute your trade plan flawlessly, whether you win or you lose. So right now, I'm in this buy position on USD, and I'm down like 5k at the moment, and I don't know whether it's gonna hit TP or not. But I'm okay with that, because I know that my job as a professional trader is to execute my edge, not to predict the future, because that can't be done. It's to focus on things that I can control. Look at what happened. We literally just got stopped out. We just lost $10,000 on this one trade itself. But I'm not phased whatsoever, because my trade plan says that I can attack a point of interest twice, right? So in this case, since this point of interest failed the first time round, right, it means that, there was insufficient liquidity for price to go up. So it later came down there and swept the available liquidity below this low here as well, right? So now it swept both of these lows, and this is where we could potentially get a giant liquidity sweep. So this becomes my new liquidation candle, and now I'm potentially looking for longs, right? I'm gonna be placing another buy stop order right above this liquidation candle itself, and then hopefully I get them to the trade. there we go. So now I finally got a confirmation that, price has liquidated this low right here. And this is where I'm going to be entering for another long position right here and place my stop loss now below this low right here that is protected. And that is where I'm going to be placing my take profit at the same exact area right here. You can see we were literally down 10k over here, right? But I wasn't panicking. I wasn't, like fucking FOMOing whatsoever. I just reevaluate the trade ideal, and if it's still valid, then I'm gonna execute again, right? Because that's what my trade plan states. Okay, so right now, since this is the protected low, this is where I'm placing my stop loss, right? Below this protected low, which swept available liquidity. So if price later on do come down there and stop me out, then guess what? I'm done trading for the day. I took 1 loss, I took 2 loss. There goes my 2 bullets. I'm not trading anymore. Right, so that's really how you should be with your trading. You just gotta be very, very tactical. So I've been studying the Stoic philosophy for the past 4 years or so. And the Stoics like Seneca and Marcus Aurelius, they believe that peace comes when you stop trying to control what you can't. Seneca said that a wise man is content with his lot, whatever it may be, without wishing for what he has not. That applies perfectly to trading. Like right now, looking at price going to my take profit, I don't control the market. I know for a fact that I don't control price, right? I can't control whether price is going to hit my TP or my stop loss. But what is within my control, what I can control, is how I show up to the markets every single day. I can control how much risk am I putting on to the trade itself. I can control my execution. I can control whether or not to take that trade, right? And that ties into, waiting for your trading opportunity to show up in the markets itself. Like right now, if this trade hit my take profit and I make about 26k, 30k, cool, right? Amazing. But if it doesn't work out, I still won because I stayed disciplined and I stick to my plan. At the end of the day, man, just gotta understand that the outcome is external, but discipline, that's internal. And that's where true consistency comes from. That's why Epictetus said, make the best use of what is in your power and take the rest as it happens. Because you must understand that in trading, your power lies in your process, your edge. It doesn't lie in the result. And that simply means showing up with the same composure whether you win 5R or you hit your stop loss. And another Stoic philosopher, I believe it was Marcus Aurelius, who said that you have power over your mind, not outside events. Realize this and you will find strength. That's what 95% of traders miss. They try to force certainty. They react to every single candle. They get emotional over one outcome. But the real edge isn't in your strategy. It's in your ability to stay unfazed by the randomness of the market. And ironically, when you stop chasing outcomes, stop chasing money, the outcome actually improves. You actually make more money as a byproduct of actually focusing on the process. Because when you start doing that, like I said, you're no longer trading emotionally. You are trading from a logical standpoint and you are trading with a clear and detached mind. And that's all that matters in trading. Bro, you can see right now price is like pulling back right now, right? And I know exactly where price is gonna pull back to because I understand liquidity. Like just look at this shit. You can see right here, this area here. Price is potentially gonna pull back to this area right here. Once again, this is institutional demand. Right? How do I know that this is an institutional demand? Because it led to a break of structure to the upside that we have right here. And then, guess what? It also swept available liquidity from this low right here. Right? So we know that this is the first time institutions actually step foot into the market. And then right now, price is potentially pulling back to this point of interest, right? So that they can scale in technically and just go in for like more buy orders. And then that is where you can see them move to the upside again, right? And the reason why price is pushing down right here is because if you look towards the left hand side, we have a supply right here, right? So yeah, this is just the natural ebbs and flows of the market. Like I said, you just gotta be calm, you just gotta be fearless, you just gotta be zen, right? In conditions just like this. Well, I guess the market is really testing me. So I got stopped out of this trade. We lost about $20,000 today. God damn it. Was this the outcome that I wanted? Of course not. Nobody likes losing, right? But like I said, it doesn't shake me because I didn't take a bad trade. I took a valid trade. I followed my system. I executed my edge. And the result, it was never in my control. So with that said, I'm going to eat the loss. I'm going to go and journal it. I'm going to reflect on it. And I'm going to move on from this trade because, like I said, one trade doesn't define me. Right? So today, this was my test. And I think I passed. Even though it hurt losing fucking $20,000.